Hi there, traders. This is Brad Gilbert with the FX Market Insight for the Wednesday, the 10th of July. All right, now this is the main trading day. This is where everything's going to kick off now. We're just at the start of the Asian session, so not a terrible lot just at the moment, but that will change very quickly. Now, if I just come down here, just scroll down slightly, just looking at across the board here, I should have actually updated this yesterday. So with the stronger US non-farm payrolls and the stronger consumer inflation numbers, it really turns around the overall negative or dovish sentiment from the Fed. And that's what we're seeing. We're seeing the dollar, especially on the hourlies, start to rally, and that's pushing all the other currency pairs down. Now, so to me, with the Fed going into a bit of a neutral bias, this is the market's perception, mind you, not the actual Feds at this point. They're going back into a sort of a neutral sort of phase, less dovish than what it was. What that does is it actually brings back into play the dovish sentiment from the other central banks. So I should have actually updated this yesterday to give you the heads up. So basically, once the Fed is on a bit of a seesaw, knife edge, whichever way you like to look at it, that's why we're waiting for these FOMC minutes, because it's going to be very important for the future forecast of rate moves and all this sort of stuff, right? And what it does is, hopefully, ideally, from the FOMC minutes. Now, I'll go into this in a bit more detail. I'll have a look at the charts, but ideally, we want the Fed to stay neutral. Okay, and why? Because that gives the other central banks sentiment edge, and that gives us clearer direction on the other currency pairs. If the Fed goes back into a very dovish phase, then all central banks are sort of negative, and that means they're all pretty much neutral, right? So that's not a good situation for us, because we want clear direction in the markets, and it's going to come from the central banks. Obviously, the Fed being the main central bank out there. So if we have a look here across what's happening in the market today, okay, what's the core market driver? Or actually, sorry, the trading conditions. Well, we've got normal liquidity. We've just got this US dollar uncertainty around this event over here, the FOMC minutes, right? That's where that's going to get cleared up, and we'll get clarity. The core market drivers, well, we still have these geopolitical events, the China-US situation. That's starting to get a fair bit more airtime. I still can't see a good deal from Trump on China. He's such a rascal. So that's there. And Brexit, you know what? Brexit is weighing heavily on sterling, and that is seeing up here, you'll see sterling, the weeklies, the dailies, the hourlies, and the central bank sentiment, the Bank of England, all pointing down, right? A hard Brexit, a leave with no deal, and also poor economic conditions are really starting to weigh on sterling. It's now down in the 124s and doesn't look particularly well. So what we're looking for, and this is how you got to think about trading as you come into the next trade day, what's going to really impact those? Well, it comes down to the upcoming events, right? So we've got Chinese CPI today. Now, this is a very important release, particularly for Australia and New Zealand. Now, I had a couple of questions about this. Now, why is Australia and New Zealand so important to China? Well, China's their biggest export market. So if anything happens in China, it directly impacts the Australian and New Zealand economies. And that's why those currencies are pretty much connected to the hip with the Chinese data. So you want to be paying close attention to that. Then as we come into that UK-European session, the GDP numbers, your overall health check of the economy are up for grabs here. Now, I'll show you the charts in a minute. Sterling is just slowly dribbling to the downside, just like a really nice trend. Except for if Brexit wasn't sort of weighing or standing over the top of sterling, you'd be very happy to be sitting short and just letting this thing drift lower, because if the GDP numbers come in weak, it just adds to that negative story, and sterling will continue to drift lower. Right, so that's actually a pretty good situation to be having as we go forward. Now, I would think the most volatile situation is the Bank of Canada interest rate decision. Now, from what I've read, there's no change in rates expected. So it is going to come down to the statement where the next move in dollar CAD will come from. And then also following that up will be the Bank of Canada press conference. So, this is it's pretty much three events: the interest rate decision, then the statement, and then the press conference, right? So you've got three things here. So if you're thinking dollar CAD's going to be an easy one to pick off, well, you might want to think again, and particularly with the current setup, if you're looking at dollar CAD, okay, on the longer term frames, it's still down in the doldrums, okay? The weekly and daily charts still down. On the hourlies, it's been creeping higher, and we've got a neutral Bank of Canada. So, you know what? It's a bit of a hard one to call. And with the statement being in control, I usually find if there's no chance of a change in rates, like trying to trade these events, the central bank events, when there's nothing like that up for grabs, it will be extremely volatile and convoluted. You know, they often they come out with negatives, answer them back with positives, and it all, you know, you see it shoot up, see it shoot down, and usually ends where it sort of starts. So keep an eye on that press conference. It is going to be pretty lively, and that's where you will get some answers that are not rehearsed, right? The statement is prepared ahead of the release to sort of, you know, ease the market into why they did things and what their forecasts are. The press conference is where it gets really lively, and you want to keep a close eye on that. Now, on top of that, the minutes. Now, it's not often the minutes are one of the big events of the market. It's more of a recap of what the statement was or the press conference from the previous meeting. But now there's been so much speculation, and we've had a number of key economic data releases out of the US of late that have really flipped the forecast or the market's perception of what the Fed are going to do. So the minutes later today are going to be extremely important. Now, obviously important for the dollar, but as I said, important for all these major pairs. We've had a situation the last week where the Fed went into a sort of a bit of a dovish sort of situation, and that threw all of the technicals out. Now that we're getting back to more of a neutral stance, we are starting to see a bit more of a continuation with the stronger dollar outlook, and that's a great trading position to be working from. Okay, so it's really important, I think, that you pay close attention to the Fed minutes. If they do come out and say, look, everything's okay, numbers are good, inflation's rising, we might have to wait and see. That's a positive, and we will see all these other pairs, euro, sterling, Aussie and Kiwi, which are starting to look very nice trending-wise on the short terms, and this will kick in the longer-term charts, and that's where the cash is going to be. Right now, if they come out and they go negative, well, we're going to see these things turn around, and obviously the pairs at the bottom, they will start to rally, and then we're back into that crazy sideways, range-bound, loose markets, and that's not going to be great for us. So, right. So as a trader, you know what we want. We want the Fed to be neutral. All right. So when you come over and look at the charts, and you're looking for tangible evidence of opportunities to get into the market, we have trend lines like Aussie's going down, Kiwi's going down, Sterling's going down, and Euro's going down. This is really nice trending markets. The dollar CAD is a bit sideways in a bashed up market. You get a bit of a triple top here around 131.45. And dollar yen, well, a bit of a safe haven play, but a bit of dollar strength. It's slowly climbing as well. So market conditions are pretty good, right? I know there's some geopolitical events which could definitely impact Aussie, Kiwi, and sterling. That's the US-China trade situation for Aussie, Kiwi, and also Brexit for sterling. But outside, you take those geopolitical events out, we're coming back into real gorgeous markets. We get some positive talk out of the Fed, and all these currencies continue. Aussie will go down, Kiwi will go down, Euro will go down, and so will sterling. Dollar CAD, well, it's all going to come down to the Bank of Canada, and that's where the action is going to be from there. Dollar yen, well, it's the dollar strength situation is in control at the moment. So just keep an eye on the dollar. It will tell you what's going to happen in dollar yen, because that Iran situation's calmed down. The North Korean situation's calmed down. A lot of the weird stuff is gone. So we're back into sort of normal market conditions. We just need to find out what the dollar's doing. And that's what the data today will tell us. So if you're wondering where the currencies are going to go, keep an eye on these upcoming events. This is where the action's going to be, and it's going to give us clear momentum. First of all, in Asia, just to recap, Chinese CPI, then you got UK GDP, Bank of CAD. We've got two sort of sections of the release there for the Bank of Canada interest rate decision and the press conference. And then the wham bam, thank you, ma'am, which hopefully gives us all the answers, is the FOMC meeting minutes. All right, big day. This is the primary trading day for the week. So make sure you tune in and see what's going on across these macroeconomic fundamentals. All right, guys, that's it from me. Have a great trade day. Cheerio.